Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss with you something that came up in a call I was having with a client earlier today. I'm going to run a little bit of basic math for you, and I'm going to tell you why it is that the considerations that people often have around taxes and where they should form a company maybe aren't the biggest thing that they should consider. So we're going to dive into that today. I'm going to discuss with you some other costs that can dwarf that and become way more important, and as a result, how you can save more money and so make better decisions about how to do your structuring. If you'd like help with structuring, please reach out to us. You can book a call with me, calendly.com/Michael-Rosmer, link in the description below. We help with international tax optimization, asset protection, residencies, citizenships, opening bank accounts, forming companies, etc. And please hit the subscribe button, hit the notification bell, make sure you don't miss out on any of our future videos. Let's dive in. All right. So in the example that I was discussing with somebody, we were contrasting a US LLC with a Romanian company, okay? And so a US LLC, in the particular situation that this person was dealing with, wouldn't result in any sort of taxation for them at the corporate level, okay? So, all right, you have zero corporate tax. That's pretty good. By contrast, when we looked at the Romanian company, you're talking about 1% of gross in terms of your tax rate, plus a dividend withholding tax of 5% when you pay out. So, you know, effectively sort of like 6-7%, depending on how you looked at it. Now, the margin in this particular case was, I believe, around 55%. So you basically can say that tax, because it's of revenue rather than of a profit, that 1% is actually more like 2%, right? So it's really more like 7-ish% total effective tax, okay? Or total effective cost, anyway. So, in spite of that, I was highly recommending that in their particular situation, they should go with Romania. Now, let's realize, to start off with, that every one of these situations is unique. One of the maybe frustrations that I experience is when people throw out things online of like, hey, you should form in Dubai, hey, you should form here, you should form here. And the truth is that the decision of what to set up has many, many different variables. And we're going to go through a few of them here as an example, such as currency conversion rates, payment processing costs, taxes, yes, cost of staff, cost of office, various other tax rules that might be involved, where your operations are, where your customers are, reputation, banking, et cetera, right? Like there's lots of different dimensions. And if you're not considering all of those dimensions, you might be looking at the wrong thing, or at least a subpar solution. Earlier today, I had somebody who, had talked to all different people, heard all different things, and we ended up going in a direction that they had not thought of. Similar thing, I think it was a call yesterday. Same idea. Somebody had, was considering 3 or 4 options. Turned out that another option they hadn't even considered was probably better in their situation, and so going that direction. So I'm using this one as an example, but the truth is, these things apply across the board. So in this particular case, the client was charging in GBP, okay? GBP or euros. Let's say it was euros, just for the sake of example. They were also going to be living in a country where they're going to spend in euros, okay? Very, very important. And they were charging via payment processing, okay? So we're contrasting, again, Romania with US, zero tax, seemingly much better, right? With, basically 7% effective tax, okay? Now, what's the consequence here? Well, immediately there's about a 1% differential in the payment processing rate, about 2.9% versus 1.9%, okay? Now notice that this is not a tax, this is not like a percentage tax, this is a percentage of gross. So again, the effective tax on that is actually doubled, right? Because you have about a 50% margin in this example. So you're going from a 1% difference to actually a 2% effective tax. Then, because it was a foreign transaction, they'd have a foreign transaction fee, which further increases the cost of payment processing. It's a 1% premium. So that's, again, another percentage on revenue. So you're talking about 2% on revenue, which is doubled. You're at 4% effective tax already. Then you would have had to convert, because you couldn't, although you could charge in euros through the payment processor, you couldn't settle in the US in euros. You could only settle in US dollars, which would mean you'd have to convert from euros to US dollars, right? How much are these providers going to charge you to convert? Probably, 1 to 2.5%. So let's just say that's 1%. Again, that 1% is going to be doubled because that's a percentage of revenue, not a percentage of profit, right? So now you're basically at 6% effective tax. But now you've got US dollars and you're spending ultimately in euros, so you're gonna have to convert it back once more. What's your bank gonna charge you? Again, probably 1 to 2.5%, let's call it 1 for simple example, you're at 8%. So 8% higher than moderately under 7%. So even though this one place had zero tax, seems better on one perspective, it actually ends up costing more than the place that has an effective tax rate of 7%. Now, this is not to say that you should go and you should set up companies in Romania. It turns out, in many cases, setting up companies in Romania is a bad idea. It's not to say that you should set up companies in Hong Kong or in any other place. It's that there are many different factors you want to consider, and the objective is not to pay the lowest amount of tax. Although I talk lots, you throw out the phrase of the lowest legal amount of tax possible. That's kind of a catchphrase. Really what you want to do is you want to keep the most of your money that you legally can, right? You want to basically operate an efficient business, operate an efficient life, so that you have more resources which you can contribute to things that you value, as opposed to giving out to some sort of institution or some sort of corporation, etc., who they don't represent what you value, so who cares? This could apply across many, many different dimensions. And by the way, it could go the opposite way, right? If you're sitting in a situation where you normally would have to are charging people in US dollars, and you need to settle into euros, the opposite would apply. You'd also look at cost of wages, you would look at cost of socials, you would look at cost of office space, then you would look at risk factors regarding, okay, what is the likelihood that if I have issues with the country that I'm in based on where I'm forming the company, et cetera, et cetera, et cetera. So all of these things, and probably a couple dozen more, can play into these decisions. But I think it's really, really important when you're considering what to set up to consider your transaction costs, foreign exchange fees, just plain pure transaction fees, etc. So I hope that helps. It's just kind of a little bit of an insight based on a real situation I was dealing with today, and helps to steer you in the right direction. Like I said, if you want help with this, please reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below, and you can check out our websites, offshorecitizen.net or offshorecapitalist.com. I'm going to see you guys on the next video.